Good morning. Happy Friday. It is Friday, March 21st, 2025. This is Option Pit Live. We're here every Friday around this time. I am joined by one Queen of the Candlesticks, Licia J. Leslie. We call her Queen. She is your chart analyst to the extreme.
Good morning.
Good morning. Happy Friday.
TGIF.
Well, Licia, it's been quite the week. Lots of action.
And it isn't over.
Yeah, it's not over. We had the Federal Reserve come out on Wednesday and really, start what looked like maybe a V bottom, right? From the 13th to kind of through the Federal Reserve on the 19th, kind of looked like we might be trying to work our way out. Little slip up on Thursday, and then today, trying to pay attention to pre-market seems a little fruitless because we've got quadruple witching day. We're going to have a ton of paper. Quadruple witching is when index options like SPX expire, equity options like Apple expire, futures expire like the S&P 500 future for March, and futures options. So that all comes off. It's $4.7 trillion expires this morning, Alicia. It's a crazy amount of money.
It's kind of nice, though, because then your sheets are a little cleared off and you can start fresh, right? Remember those days?
Yes, and there is going to be a massive amount of covered call flow starting to hit this morning in index funds. And then Monday, after all these things expire, remember the day after, Friday, Licia, you'll remember this from your trading floor days. I know I do. The Monday after these big expirations, what are you doing all day in the pit? With what were you trading all day?
The next month, that brand new month,
the
money. What I remember most, Mark, is when you were long all those expiring options, just calling in. I was talking really aging myself, but you had so much gamma that you lined up 5,000 shares every quarter up and down just to scalp that 3/8 or whatever you could out of there. So being long the gamma, you had a lot of volume and thickness to go through, right? But if they're shorted, to me, in my mind, that's how I look at it. I remember as the holder, the market maker, the liquidity provider, I had just, had my offers and bids in there just to be able to participate if the stock touched there, right?
Right.
And came back. And you would just scalp that. But being shorted, you were,
white knuckling it.
Chasing, yes. And if it blew past, you're chasing it because all of a sudden now you're long the stock or short the stock at a higher price, long it at a lower price, right?
Yeah, absolutely. Well, what I was kind of thinking about is that, when I was in the pit that Monday morning, for the first 3 hours of Monday, all I did was covered rights, fill covered rights for retail traders and big banks and covered call funds. So all their options expire on Friday. And then Monday morning, they're like, I need to trade 1,000 shares of GM with the 45, the GM. I need to sell the GM 45 calls tied to stock one up. Yeah. So basically I would be buying calls, selling stock, and then we would be doing the other side. Yeah. There was a lot of that on Monday morning. So the point is that there's going to be new, fresh, long options for market makers going into next week. So that could change some of the dynamics of the market. the market makers have a lot of premium way up at the top. They don't have as much down here. So now they're going to have a ton of inventory to potentially start selling, which actually put a damper on volatility. Speaking of dampers on volatility, one of the things I've been watching real closely is for decreases in movement. And I've been watching VIX. You, of course, are watching pitchforks. And every Friday, people are clamoring to know, what do Licia's pitchforks tell us? And I want to know what you're seeing in the indexes and stocks that everybody is paying attention to closely right now. So, Licia, what do you got in the market?
Well, I wrote up last night in Profits and Pumps. You should all be reading Profits and Pumps. It's a free newsletter. There's always a trade idea. Luis, if you could share my screen. I'm thinking it's a possibility we stay between 5,600 and 5,700 until April 2nd. And we just have a box range there and trade sideways. I mean, it's definitely 100-point difference where you could buy down here and sell up here. But it's interesting because we are at the bottom of the pitchfork, and so far we've held, except these couple days, but could be a bear trap. We've held my support. Now we're testing it again. I think we close below 5,600 or get a good amount of trade below there. We can easily slip to 5,400 pretty quickly. And I don't think it's safe to really go long until we clear that 5,700 and get a good, powerful close over that. I'm thinking maybe we just bounce back and forth in here till April 2nd. April 2nd is the big day everyone's waiting for. Am I wrong on that?
I mean, people that think this is tariff driven, that is definitely what they're a date that they're closely watching.
We don't really have a whole lot in between here and there, I don't think.
In terms of major economic reports,
yeah,
I don't believe so. Looking, obviously today, nothing.
Yeah, no economic news today, so it's a pretty good move this morning.
PMI, we have PCE next week.
Okay, that's a good one.
PCE and core PCE, those are popular, and then outside of that, not a lot. You're right. It's going to be, and the last couple stocks that I was watching for earnings came out last night, Micron and Nike.
Yes, and FedEx.
Thank you.
All negative.
Yep. Nike in particular is a dumpster fire.
Nike hasn't. It's been looking pretty ugly for a while.
Yeah. I don't. If you're thinking about buying it, don't do it. Not just do it. Yeah. It's bad.
Took us all a second to get that, Mark.
Yeah. Let's take a look at the triple Q, because what's been interesting about this sell-off is it's very top 8 driven. Everyone's like, oh, it's tariffs. If it's tariffs, why are they selling Google? Why are we unloading, NVIDIA and, some of these other names that maybe don't have that tariff exposure? So I think it's a little bit of a revaluation of the top end is what we're seeing here.
Mm-hmm.
Maybe that it's a little more about that and a little less about the tariffs. Because the Qs, you look the Dow over the last 3 months, the Dow's down 1%, S&P's down 5%, Qs are down 8% or 9%.
Right.
What creating that spread? The more weighted in the top 8 names you are, the worse your index is doing, and the Qs are the most weighted by a long shot.
I have 471.72 as support there this morning. A little further lower.
Mm-hmm. Yeah, we're at 474 right now, so
Yeah.
Currently down about $5. What do you the one asset that's been taken off is gold. What do you think of gold?
Bull flagging here. It is up against my resistance. It held perfectly. A lot of times when you hit that support or resistance, you take a breather, bull or bear flag at that support or resistance before taking the next leg higher. So yeah, look at this morning's low, stopped right there, 30.2158. We need to clear yesterday's high, 30.58, and yeah, 3,100. It's not far. It's right up here.
There you have it. And then, you know, the other asset that's been trading like those 8 names is Bitcoin.
Yes, it
you know,
is.
obviously even worse than some of those names, but those 8 names in Bitcoin, I mean, all the strap on risk trades are kind of taking it on the chin.
Yes.
So to say.
You had me at strap on, but the breakout of the box of Bitcoin, it did try, right? You had a box range where it tried and failed, and now it's retesting that support. So the day is just beginning. Who knows where we end up this afternoon?
Yes, that's the last piece, is that for some reason, the trading at 10 a.m. and the trading at 2 p.m. are completely independent of each other.
They have been. They have been.
Yeah. So if I was to summarize your take, you see the S&P close above 5,700, you know, and then open up positive the next day.
Yeah.
You're a buyer. You're a buyer.
Yes, I would be. I would not, maybe not necessarily a buyer of the you know, the overall market, but I would definitely be buying calls on the stocks that I like the charts on. I'd be more comfortable going long in these. There's so many stocks that look ready to break out, but when the overall market is so dreary, it's kind of hard to put your leg out there, you know?
Yeah, and there are stocks, believe it, like I said, this sell-off is not bad. It's only bad for about 8 names. Most of the rest of the market is either up or flat or marginally down. Now, what you worry about is what happens if the entire market dumps at once, and we have not had a candle like that. You know, the sell-off, the biggest sell-off we've seen in the last, let's say, 6 months took place on December 18th, not during this period. This was just more consistent.
Yeah.
All right. So speaking of consistent and persistent and spiking, let's bring in one. He may be spiking, but he is also a Viking. He is the Viking of volatility. He is Andrew T. Giovinazzi, our vicar of the VIX. Andrew, you kind of heard Licia and my discussion about the overall market. What's your take on the market? And then you saw Licia going through a couple of stocks. You know, do you want her to look at any that you're kind of watching closely, or do you have a reaction to the levels that she's thrown out there?
No, I do have a reaction. I think there's no underlying, I would say, like ballast for the market at this point. When we're seeing some flows to Europe and China getting out of big cap, but I mean, you have to be honest. If you've ridden Nvidia from $10 to $100 or $120, you're like, maybe I'll take some. Maybe China doesn't look so bad. Maybe the Europeans get their act together. Microsoft, Microsoft at 30 times, still a growth company. Google, like we said, is probably the most reasonable, but also probably one of the larger ones where AI could sort of take their bacon. I think that's another. So, you know, and I saw the most, probably one of the better examples of this was not the dot-com boom, but the Nifty 50 boom in the 70s. And I mean, people are starting to take some money on these. Now, you know, if Microsoft dropped 35 or 40%, it would be a reasonable growth company again, priced growth company. All right. So those are all real things. And I think the AI landscape is different from the internet landscape. Remember, like everybody's like, oh, just we're gonna have a web presence, right? It was very much always an additive thing. Now the AI thing is mostly like whose jobs are going to lose, or what, or what processes are going to be done by AI that humans aren't going to do anymore.
Right.
All of that is massive uncertainty. And the only clear winners were companies like NVIDIA, to some extent AMD, and things like that, right? So I think that's where we find ourselves. So you've got a little bit of taking some money off the top, and then the second part is sort of the halo post-election is over, because the reality of trying to do something apparently is very hard. Sentiment is bad. Teslas are getting burned. Like, whatever, you call it what it is, but it's like, we're just really trying to cut spending here. I think that's it, right? So there's a lot of the tariffs. Powell acknowledged they're adding uncertainty, but he really can't quantify it.
Right.
You know, he's saying that inflation should be higher and growth should be lower, because he's assuming the government's going to spend less money. But I haven't seen that yet, right? I mean, we're here at Talk. So there are a lot of currents, and none of them, just for right now, are helping prop stocks up, right? The Europeans, now Germany just passed some $1 trillion defense spending thing. Where are they getting the money for that? Where is the Eurozone going to get? Like, okay. So, and then the last thing, Heathrow
shut down power for the
just for fun. So, like I say, you don't have a lot of great sentiment out there. Could things be better in a year or 2 years if some of these things played out to some sort of positive degree? Sure. But right now, when there's no real money coming into the market that's like wants higher stock prices, and the Mag 7 at this point clearly has lost some
luster.
They've lost a little luster, I would say. And now the Qs are down like a solid, we're down. What was the high for the Q? 5. I'm trying to look at that high price. We were 550. Was it that high?
The all-time high was February 18th, and it was 540.
Right. So
or 5.
I'm going to say if the Qs are down 20%, it won't surprise me at some point at this. It seemed to stop down 10, or 10, 12, 14. But it won't surprise me if we lose 100. That's 440. We're not very far away from that. So, and then all of a sudden, okay, it might be a reasonable valuation. So I just think this market is not going away. So we're going to rally, and then we'll sell off. We'll rally a little more. We'll sell off, and it will keep going until there is some sort of policy change. Because right now, the Fed, I think, if the Fed said anything on Wednesday, Powell said anything, he's not going to do anything, right?
Other than they are going to reduce their runoff on the balance sheet. That was a little bit dovish,
right? Little
dovish. That was why the market popped and then dropped initially.
But other than that, you're not, and the Fed has created that historic pop, right? So you get this two-way trade, which of course is good for my,
two-way trades.
Two-way trades. We rally, you sell that stuff, you sell off, you sell that stuff, and then you go do it again the next week. And I don't think we're going to be out of this. Now, we do have a date, April 2nd, which could be a special situation, Mr. Sebastian and Miss Leslie. So could be very interesting because, and as of right now, whatever negotiations are happening, you're not hearing anything out of the news like it's cool, right? It's mostly just, well, you're going to do this, I'm going to do that. The U.S. faces a lot of tariffs on goods. There's certainly room to negotiate all of these things. Anyway, that's where we find ourselves. I think it's a great time for two-way trading. We do have a try it out for a month at Option Pit. So we do have monthly subscriptions right now for the first time ever. So
yeah,
get your feet wet doing it.
Yeah, we're going to talk about that in a second because I want to ask you about that. But before we dig in, all this talk of halos and lifting people up. Our queen with halos clearly around her is gonna we're gonna let her bounce. So I can ask you a couple of questions specifically. But Licia, what do you got for the rest of the day? I know it's impossible in this market. No one's gonna hold you to it.
I would
what do you got?
Watch Tuesday's low. If we don't hold Tuesday's low, we're going south. It's possible we bounce. Could be an overreaction and we get a two-way going.
I mean, we did yesterday.
Yeah. It could be overdone. People could be like, this is ridiculous. Watch Tuesday's low. With that, see you guys. Have a great weekend.
All right. Have a good morning. The queen, everybody. Licia J. Leslie, queen of the candles. Read her Option Shopper newsletter. All right. So, Andrew, we were talking about two-way trades a little bit, which are both of you and I agree are like kind of perfect for this environment, right? Yep. You're getting big moves, and vol is moving around. So, just kind of remind everybody, what is a two-way trade and why do they work?
Right. So essentially what you do is you have a SPY part and you have a VIX part. And the idea is the VIX part of the trade helps finance the SPY part of the trade. So usually the way VIX and the VIX futures works, there is a future to cash mechanism there. So you could buy options, but sell volatility in VIX, or you could buy options and have things melt up to the cash level. So what you're doing is you're just using VIX to pay for SPY. And you have a long market piece and a short market piece. And then the market moves and you sell the part that's paying, and that's it. So it's not super complicated. It's just you have two legs of a trade and you let them run. Sometimes you close part of the trade in a day. Other parts, you close the winning side in a couple weeks. Right now we're running some long VIX and short SPY after kind of closing the long sides on the rallies that we just had. And now we'll see what happens. See if, we actually get a pretty fair payday as possible today. So
yeah. And, what have the results been like over the last couple of over the last few weeks?
We're still running positions. So I'll let you know when they're all closed. So we've closed SPY put spreads up 15 to 20%, nothing huge. We closed some VIX calls up 40 to 80%, depending on which set of calls. So you definitely have stuff rocking. And now we're on the other side of a couple of trades looking for volatility to come back the other way to see if we get a good pay date. So basically half the trades are closed as the market fell apart. Now we'll look to make some big money. So
you monetize the sell-off, and now if we get a reversal, you're going to clean up.
That is basically the idea.
You're doing fine now, but if we do reverse hard, you're going to crush it, is what you're telling me.
Correct. And we just put on a new trade, 2 new trades. So we have gains on the long side to flip over a little bit. And now we're actually riding all the short market pieces today. So we might have some action to go here. So I'm probably running a SPY put spread up about 20, 25%.
Well, and the nice thing about two-way trades is there's not a lot, it's very regimented. You were trading on Wednesdays. You trade once a week.
Yep.
You enter a new position once a week and then exit when it pays you.
Correct.
And typically the typical duration is what? 2 weeks? About the normal length of the trade?
About the average close. We put on 1 month trades, but it kind of works out on average over history that we close about every 2 weeks. So,
all right. Once again, if you'd like to join, make sure you join. Here's the link, and hop in on Weekly Profit Cycles. The monthly offer, right? We're doing the ability to join on a monthly basis. That is at a very special price. That is going the way of the dodo, I believe. I believe tomorrow, maybe Sunday. I forget. Yeah. But so your time is running out to give a trial to Weekly Profit Cycles. If you haven't done it yet, you are missing out. It is a great way to take advantage of a market exactly like what we're looking at.
Right.
All right. So, Andrew, so there's our call to action. For what we've kind of talked about, where the bottom will be. Do you have anything very specific for where the bottom will come in?
I think we're too close now not to test the recent lows, to be honest. And I think we just keep ratcheting down somewhat. It doesn't feel like it's going to be one of those V-shaped bottoms where everybody's like, it's over. I think, to be honest, it's just going to be a little bit more of a grinding sell-off, which is nobody likes it, but I think that's what we're going to end up with. So I think at this point, we will probably see the lows that we established over the last 2 weeks. What was that, like 550 SPY?
55. The low was 55.0465.
Right. So we're going to see that probably prior to the April 2nd, tariff thing, because the market is, for whatever reason, that's what the market is living on. It's generally not good news. And that's what we're living on. So it's not going to surprise me to see that currently.
All right. What are you once again, if you want this insight and you want to give it a try for a month, join Weekly Profit Cycles for the 1 month trial. See if you like it. And if you don't, you can cancel, but most people do. So
most people stay.
So click that link. Andrew, what do you got for we've been down, we're down about 40 right now. What are you thinking on this market? S&P futures 5670. Q's down about 1%. SPX down 0.75%. Diamonds, the Dow Jones down about 0.8%. And the Russell 2000 down. So we're kind of a little broader today. What do you got? What are you thinking? Up or down?
I am thinking we'll be down on the day. Don't forget, today is a dividend and XD day.
It is a dividend and XD day.
So
it is quadruple witching.
Yep.
There is so many balls in the air right now.
Well, at this point, if the market can't grasp onto the Powell testimony being good, they're going to grab onto it, saying there's not really a lot of help from the Fed, which we're in that weaning. What did Besant say? There's that period where we're weaning ourselves off.
Yeah.
Stocks. And I think we're kind of in that. There will be bargains. Besides two-way trades, I nibble a little on stocks every week. Not a lot, but some of the names I like that are on sale. There's some very interesting, like Pinterest is one. It, like, literally might be the cheapest internet property out there. But you nibble, you buy a little, and you see what happens. And I think this could go on for weeks, months, whatever. It's kind of like, the COVID was a V-shaped bottom. I don't think we're going to have that as much because we're looking for some policy subscriptions going forward. So,
absolutely.
So it's going to, but again, if the tariffs get settled and all that kind of stuff starts to get better, like We'll be at 5,800 really fast. Really fast.
Yeah. Well, here's what I'll tell you. With all these index and futures expiring this morning, before you try and do anything, give it about 20 minutes. Let them work through everything. And then I think the market will take some shape. Wouldn't be surprised if it looks a lot like yesterday. Down on the open, work our way back up, sell back off, rally a little bit. A lot of meandering back and forth. I don't see a lot of reasons for any shoes to drop, but you never know. Maybe we end up really ugly. Then watch out for Monday. That would be the one piece I would keep in the back of my head.
Right.
All right, folks. That we're running up against it. It is time for us to go the way of the dodo for this week. So for Andrew T. Giovinazzi, the Viking of Volatility, your Vicar the Vix, and your talented two-way trader, I am Mark Sebastian, your only option. Give us a call with any questions you might have, 888-872-3301, 888-872-3301. Email us support@option.com, but most definitely click the link. All right, folks, have a good one.
Have a good one.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.